being audited by the IRS is not as scary as the world makes it out to be. The first thing that you have to understand when it comes to IRS audits is that they do not automatically mean that you're in trouble or that somebody's going to come knocking at your door. In fact, we have to understand the different types of audits because there's 3 different types of audits. The most common one is a correspondence audit, which is where the IRS sends you a letter asking you to essentially further clarify claims that you made on your tax return. Generally speaking, it's always related to a specific claim that you made on your tax return. In an example of this, let's say that you're like a content creator, you gross $200K in revenue. Like, let's just say that you claim that you spent $50,000 on meals and an additional $100,000 on travel. Like, the percentage of revenue going towards meals and travel is such a red flag. In this specific case, most likely you would receive a letter from the IRS asking you to back up your claims. If you were keeping clean accounting records, then all you have to do is show them the accounting records that indeed reflect the claims that you're making on your tax return. So the easiest way for you to fight an audit is just for you to have clean accounting records. The second type of audit is an in-office audit where you go to an IRS office where they ask you deeper questions about your business. They want to know about your income sources, documentation, and just better understand the claims that you're making on your tax return. So once again, we go back to the same thing. As long as you have clean accounting records, that's going to be your best defense against any type of audit. And then the last and most invasive, you could say, is when the IRS actually comes to you to double check that, once again, all of the claims that you're making on your tax return are legit. So if you are running some sort of like e-com business and things like that, they actually might go to the warehouse just to make sure that everything is on the up and up to, once again, double check that the claims that you're making on your tax return are indeed reflective of reality.